Welcome back. Well, let's talk about earnings now. Caplin came out with numbers yesterday. In fact, they reported what was a very good set of numbers, which was really buoyed by the Latin American as well as the US markets. EBITDA grew 27% year on year. However, their margins did contract in this quarter. To discuss this and more, we have Vivek Siddharth, the COO of the company, who's joining in now. Vivek, hi, welcome to the show. If you can first start by talking about the breakup between the Latin American markets as well as the US, how did each of your key markets contribute this quarter?
Hi. So the breakup in revenues over geographies is almost around 80 to 85% of our business is from Latin American markets right now. And we also have some brand marketing presence in Francophone Africa. And recently, the good thing is that the US is showing a good uptick in revenues. I think we are looking at around 8 to 10% of our current revenues from the US.
Okay, when you talk about the US markets, can you just give us more perspective? How much does it contribute right now? I know it's in nascent stages. How much did you make this quarter vis-a-vis, say, last quarter? And what's your guidance going forward?
Yeah, so the real revenues from the US will start, I think, in the next couple of years. Like last year, we close to about 2 to 2.5% of our revenues only were from the US. This year, it is likely to be about 8 to 10%. And this quarter also, you can assume that the number is more or less the same. But going forward, in the next 2 to 3 years, we fully expect US to occupy a significant percentage of our overall revenues.
Okay, so that's on the top line, Vivek. Good morning to you. On the margin front, I just want to talk about this compression that's happened. A dip to almost 31% versus almost 36% where you were last year. Now your expenses have gone up quite dramatically, both in the quarter and in the first half. By when does this normalize, and what should we expect on full year margins?
Yeah, so we've always worked at a high EBITDA and PAT margin. Recently, you might have seen a slight compression in that because we've taken on a few initiatives such as going for our own backward integration into API and also getting into clinical research for many of our products as we migrate into the larger markets of South America. So the OPEX are factored into the costs. So you will see a little bit of a compression in the short term, I would say, at least for the next couple of quarters. But I think if you compare us to industry average, I think 30 plus 35% EBITDA, I think is still a decent number. But we will strive at making this bigger.
So just to understand, are you saying that you will look at this compression for the next couple of quarters as well? What does that mean? Could you dip to 30? Could the margin also go below 30? What's the guidance?
No, so we've been at around 38 to 40% EBITDA in the past, and I think we will always be higher than 30% minimum. But what will happen is that as we are getting into more and more OPEX from some of the new initiatives that we've taken, like I said, into backward integration of API and CROs and all of that, and plus please understand that we don't capitalize any of our expenses into R&D as well. They're always expensed out, So we are following this practice for the last few years. We don't expect any compression in a large scale in terms of margins. We've always worked at a high margin level and we'll continue working at this kind of a level. I don't see this dipping down too much.
Okay, just tell us a little more about the injectables bit of the business. Caplin Steroids, that's basically your US arm. You got some funding some time ago, earlier in this year as well, over around 200 odd crores. Can you give us a sense in terms of how the funds are utilized as of now? Any more fundraising on the cards? What is the pipeline of injectables?
Yeah, so the US arm of the company, which is a wholly owned subsidiary of Caplin Point right now, this is the one that Fidelity has invested into. So this is sort of connected as well, right? In terms of the new initiatives that we've taken on, these were opportunities that were always available for us, but since we're a company that's not very interested in taking on debt from outside, we were sort of being a little conservative and not going into these initiatives. But once the Fidelity funding has come in, that sort of freed up a lot of our cash flow for us to get into newer opportunities. In terms of the injectable business itself per se, I think it's being very positive for us. We've filed 12 ANDAs, of which 5 were approved, and in this quarter especially, much of the revenue that we've seen from the US is from the product itself, and I fully expect this to go up in the coming quarters.
So you have an oral solids business as well as an injectables business in the US?
No, so we are only into injectables and ophthalmics in the US.
Okay. Just a follow-up, Vivek, you have around 245 crores of cash on your books. What's the utilization?
So we are heavily investing into R&D. As a company, we've always been a market-driven company, but after a certain point, we understand the need for technology and getting into complex and niche spaces, both in terms of product and in terms of markets. So we want to be conservative at this point. So we don't have huge capex plans or anything. Incremental capex is what we are looking at over the next year and a half. Most of this cash we will be holding on to our books.
Okay, all right, Vivek, we will leave it on that note. Thank you very much for joining in, and let's see how the rest of the year shapes up for Caplin Point. We take a break on that note. On the other side, some F&O trading ideas.